In this video, I will share with you my favorite trading strategies that I used during the London session. I will give you a step-by-step approach which includes everything you need. I will analyze the types of Asian session, which currency pairs and indexes are better suited, and as well as important aspects of risk management. In addition, I will show you a special approach that helps me to be more patient and not enter the market ahead of the time. This is one of the key elements of success. So be sure to watch this video to the end, there will be a lot of useful materials. Let's go! So let's talk about this strategy, which currency pairs and indexes are best suited, and as well as important aspects such as risk management, setting stop losses and take profits. This strategy is based on Asian liquidity and a zone of interest or triggers. The strategy can be traded on Forex or European indexes. And now let's look at session settings for this strategy. Asian session 6 p.m. to 2 a.m. and London session 2 a.m. to 5 a.m. Plus, to this strategy, I use timing. I open position only XX00 or XX30. Based on statistics, the price at this time either reverse or make a pullback, or price can sip of liquidity. For example, you open chart in 3 a.m. and didn't see a good opportunity to trade. Then you watch chart in 3:30 and so on, until find good intermodal open an order. And the best pair to trade the strategy. If you love trade forex, you can trade the strategy on Euro USD or GBP USD. Or you can try to trade the strategy on European indexes, Germany 40 or Euro 50. You can test trading on all these pairs and then analyze which pair is easier for you personally. I advise you to choose only one or two assets. Risk management. Personally, I risk 1 or 2% or even 0.5. Where to put take profit? Personally, I put take profit to POE zone. It can be fellow volume gap on higher time frame or order block. Or I can to put take profit to liquidity. It can be previous daily, weekly and monthly high and low. And if you don't find optimal triggers to put take profit, you can put 1.5 risk reward. Where to put stop loss? Usually I put stop loss below or above swing high or low, or below or above breaker block. But be better if you put stop loss below or above swing high or low. And important rule: close order before economy news release, or skip the London session if economy news will be released during London session. And now let's figure out types of this strategy. First type based on trigger activation on higher time frame, followed by validation of the idea using 5-minute follow volume gap, or price can slip off Asian high or Asian low and reverse and create market structure shift. Let's look at this example. During the Asian session, fellow volume gap 1 hour was formed, and during the London session, the price filled in and created fellow volume gap on the 5-minute time frame. And my task as a trader to identify signs of reversal after filling gap. And another example. Here, fellow volume gap is behind the session. The price can slip off liquidity Asian high or Asian low, activate this trigger and reverse. Let's look at this example. Here, fellow volume gap 1 hour behind the session. The price slip of Asian low, activate the trigger, which is 1 hour fellow volume gap, and reverse. And it looks like on the 5-minute time frame. Price fills this gap, and on 5-minute time frame, price create market structure shift plus fellow volume gap. And I open position on timing 4 a.m. And quite often I see a situation when the price slip of liquidity Asian high or Asian low and reverse. Very often it looks like this. The candle closes below the level and the created long wick is formed as a candle. And now let's look at a real-time example. In this strategy I use two indicators. First of all, which is ICT kill zone and pivots. This is my settings. And fellow volume gap by nephew Sam. Let's look at this example. About the risk 1 hour fellow volume gap. Now let's wait for the London session. The price filled imbalance. Now I need to find the reasons for the reversal. It can be a fellow volume gap or market structure shift. As you can see, was formed fellow volume gap. And now I need to watch the timing. Right now 4 a.m. and 50 minutes. I need to wait 50 minutes and enter position in 4 a.m. 30 minutes. Right now I can open position because was formed fellow volume gap and market structure shift. I marked breaker block and stop loss will be above the border and take profit below previous day low. Okay, my stop loss almost was achieved, but price reverse and achieve take profit. Right now, let's look at another example. Right now, Asian session and was formed 1 hour volume gap. London session have started and now I need to find signs of reversal because right now price fill this gap. As you can see, was formed market structure shift and now I need open position by timing. Right now 2 AM and 50 minutes. I need to wait 10 minutes that open position by timing. So 10 minutes later, price made a little pullback and reverse, and now I can open an order. Stop loss will be above swing high, and I don't see clear triggers. It means that my risk reward will be 1.5. So good trade, take profit was achieved. So okay, and now let's talk about second type. The second type is completely trigger-free story. Trade decisions are made using the borders of Asia as a reference point. In this example, I use Fibonacci levels. The price forms a breakout structure and makes a pullback to the Asian zone. It can be 0.5 or auto-year zone, or price can make a pullback to fellow volume gap zone. In this scenario, step 1 is a breakout structure of Asian high or Asian low. Step 2 is a pullback to imbalance zone on 0.5 or auto-year zone. Step 3 is to wait for the formation of gap after the pullback. In this example, you can see that price create breakdown and imbalance of the market. After a while, price create a pullback and in timing 4 AM, price reverse. And below was previous daily low. It was important liquidity level and my take profit was there. And the third type, it just looks like the same logic with type 2, only here another algorithm. In this example, price start work from 0.5 within the Asian range. And the price gets a 5-minute fair volume gap after fixing under or above. In this example, the price was in the middle of the Asian session. The London session began and fair volume gap was immediately formed. The price made pullback at 3 AM. It was possible to open a position from fair volume gap. And now let me show you real-time examples. Let's pay attention to this example. Now the price is inside the Asian range, and after a while the price broke Asian high and formed a breakout structure. And now my task open position from fair volume gap and open position by timing. Price filling this gap and now 4 AM 40 minutes. Logically I should open position 10 minutes ago, but I missed it. But now I can open position because I have reasons to enter in position. I marked breaker block and stop loss will be below this area. But be better if you put stop loss below swing low. There is no clear triggers above to put take profit, so I will put risk reward 1.5. Take profit was achieved, and now let's look at another example. This is Great Britain pound and US dollar pair. Right now the price is inside the Asian range. The London session will start soon. Let's see what's happened. As you can see, was formed break of structure Asian high, and now my task open position from fair volume gap. Let's wait until the price fill this imbalance. The price filled this imbalance and now I can open a position. I put stop loss below swing low and risk reward will be 2 error. And I want to share with you a checklist that to enter in position. First of all, what type of Asia do we have now? If you don't identify a type of Asia, then wait. The second is are there triggers near the borders the Asian session. In this strategy, you should use top-down analysis. You need to start analyze from higher time frame. It can be 1 hour or 4 hours. If you look near the borders, fair volume gap or order block, it can be an important trigger. And the third question is the fair volume gap on 5-minute time frame or 15-minute time frame. Because when you trade from higher time frame imbalance, you need to identify volume confirm, and this is fair volume gap on lower time frame. And the fourth, are the timing met? Let's remember what I told about at the start of this video. I open position only XX00 or XX30 because according to my statistic, I'm identified that price in this time made a pullback or a sweep of liquidity or reverse. So traders, we have analyzed my favorite strategy for the London session. Now you have a clear step-by-step plan that may help you improve your trading. Also remember about discipline and patience. This is 2 powerful tools. Be sure to watch my Telegram channel and get free course absolutely free. Thank you for your attention. See you again.